What's going on, guys? Welcome back to the channel. Netflix just had their earnings and they are down about 20%. This is going to cause the markets to go through a major downward correction, possibly into a bear market. So we're going to cover that, what Netflix numbers are and why this is so bad for the overall markets, because you guys can see the SPY was down crazy today. This violent sell-off the last 2 hours of trading really did confirm this potentially bearish market is coming. As well as that, we are going to go over the Sofi trade, because believe it or not, when the markets are selling off, that could mean that hedge funds who are short on Sofi have less money to service their margin calls as the stock continues to rally higher. And that's exactly what happened today, with Sofi closing the day up about 8%. So we're going to take a look at the short interest, the technical analysis on that, but I also do want to briefly cover Lucid Motors because they look very promising as well for a short squeeze. So let's dive straight into this video. If you guys find value out of it and want to stay up to date with everything that is going on in the markets, hit the like button for me. Comment down below, do you think a bear market is coming? What do you think is about to happen next? Today was very exciting, and on top of that, subscribe to the channel if you have not already. We are also going to talk about my over 2,000% winning trade that was just hit on Disney in after hours. So excited for that, but let's dive into it. First off, we are looking at the SPY chart, and as you guys probably do know, in your portfolios, I'm sure you guys watch the markets somewhat if you're watching this video on a daily basis, so you understand we've been in a lot of pain in the markets ever since really late December. We did hit that high. We've been coming down quite rapidly. Well, the main level to be watching was really $450, and as soon as we hit that today, we just started to gap down under that, hit a low of $444.50 per share. And this 200-day moving average is next. It's likely that we do gap down to that level tomorrow. If we don't find support there, then we're going to go back to $400 on the SPY. That's going to be a major 20 to 25% really crash of the markets. And if that happens, if you guys follow this blueprint that I'm going to give you, you will make a ton of money and you will be happy that the markets crashed. So what's really going to cause this? And the first domino is Netflix, down 20%. And if we see right here, it says Netflix reported fourth quarter earnings after the bell on Thursday. The streamer beat on both the top and bottom lines, but shares plunged in after hours trading on slower subscriber growth. The company said for the first quarter of 2022, it expects to add 2.5 million subscribers compared to the 3.98 million it added in Q1 2021. So that's almost a 50% slower growth rate. And a lot of analysts are starting to question if they can keep up this subscriber growth rate. And I think it's pretty clear to investors that they cannot. That's why the stock is down 20%. But keep in mind, your Apples, Nvidia, Tesla, Amazon, Netflix, Facebook, Google, Microsoft, those are the largest stocks, and those stocks control the overall indexes. So you're going to see this have a drastic effect on the other large cap stocks and bring down the whole valuation of the markets, which means the market will fall. As far as the Disney trade I did put on, it was a 147 put for tomorrow, so definitely risky. I only bought 2 of them. Once I was up 100%, I did play it safe and sold one for $69. In hindsight, obviously, if you could look into the future, I wouldn't have done this, but I did, and I still have one, and that's going to open up over $600 according to this price that we did close at, $141.76 for Disney. So that's an over 2,000% winning trade. And if you guys want access to my trades, link down below in the pin comment for that one. And it's kind of crazy, these contracts were going for like 9-10 cents most of the day today. So let's move on from that. Let's get into the Sofi Lucid update and how you guys can actually hedge out your portfolios. So if we're taking a look at Sofi's short interest, we are at 12.27%, 75.83 million shares that are sold short. The cost to borrow is starting to go up, so we're almost at 4%, and that's the monthly rate that short sellers have to pay to keep their positions open. So once you start to see the market selling off in this rapid, just panic selling like state, you do start to see liquidity being restricted pretty much overnight. And if a stock is rallying and shorts get a margin call, they all of a sudden don't have as much money to service that margin call. So they are more likely to cover than not. And I think that is likely to happen to SoFi, and that could actually continue to further this rally because the fundamental news for SoFi was really, really good. Now, we did only close up 9.41%, and it's like we only closed up 9.41%, but we were up close to 20% earlier in the day, did hit that high of $16.47 per share, but it's ultimately looking good. We're not cratering in after hours. We are down 27 cents or 1.8%. As far as the days to cover, which I think is the most important aspect of, the short squeeze, is at 2.4. So that means if all of these almost 76 million shares wanted to be covered all at once, it would take almost 3 days to do so. So shorts that really need to get out of their positions, they have to start paying astronomically high prices to get out of those short positions. And considering how much SoFi has fallen, I mean, we were around $25 per share in early November. It wouldn't surprise me to make our way back to $20 per share if we do start to see that short squeeze tomorrow. As far as Lucid is concerned, let's go ahead, pull up Lucid. We can see Lucid was down 3.27% today, up 3 cents in after hours, or 0.08%. I do have a short position on Lucid in the form of options to protect my very large position of $11,625 worth of Lucid shares, up about 80%, 32% of my portfolio. But I did go super far out the money with February 18th. I did get the $20 puts and I bought 15 of them. I am down about 25.5%. And I paid $32 for these. So if we do see the market come down in a substantial way tomorrow, that should do very, very well. And before we do go ahead and wrap up this video, because I don't want to make it all too long, we are going to take a look at the technicals on SoFi, our key levels, as well as this gamma squeeze potential. So if we're taking a look at the gamma squeeze potential, we did close at $15 per share, but we did fall 25% in 25 cents in after hours. So we are technically under $15 per share right now, and that controls about 32,000 calls that are on the option chain at that $15 strike. So if we do see a move tomorrow to the upside, those 32,000 are going to go into the money, and likely the ones that are just out of the money. And if we could make our way to $17.50 per share, then we do have 23,000 for open interest at $17.50. And in between these two are, quite substantial as well. Almost every strike has over 5,000 for open interest. So that is looking really, really good right there as well. Now let's pull up the SoFi chart just briefly and take a look at some technicals. So we'll pull up the daily right here, and then we will pull up the moving averages as well as the MACD, because that's going to be the most important thing to obviously take a look at. So if we're looking at SoFi, obviously, we've seen this big pop. It came back down. We're going to have to break out above the 20-day simple moving average. That is in between the Bollinger Bands as well, which I do have right there, and we are actually above that. That is the 50-day simple moving average. We do have to break out above, and that's where we did hit that high today. So it's going to be a little bit challenging. I do want to see us stay above the 20-day simple moving average, which we are currently right now. So it does look very good. As far as potential downside, I would really watch that $14 level very closely to see if we can remain above that. It certainly looks like we're going to, given the news that we did get over the past couple of days on SoFi. And if you guys pull it out like this, you could see just how much SoFi could actually fly and how much we still have to recover comparatively to where we have been in the past. So that is going to be all for this video. Hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section, do you think we're heading into a bear market? What is your thoughts around Netflix earnings? Your thoughts on SoFi or Lucid? Let me know. I respond to every single comment. So I'm going to get out of here. You guys enjoy the rest of your day, and I will see you in the next one.